Hello everyone and welcome back to the channel. I'm your host, Shane, and today we're going to be discussing everything you need to know about credit scores. We're going to discuss what a credit score is, why it's significant, how it's calculated, and of course, how to improve it. Now, without further ado, let's begin. So the main question is, what is a credit score? In a nutshell, a credit score is a 3-digit number designed to represent the likelihood you will pay back your loan on time. The higher the score, the lower the risk the borrower has in loaning an individual money. Higher credit scores also generally result in more favorable credit terms. Now, there are many different credit scores and scoring models, but we'll get to that shortly. So, when is a credit score used? Your credit score mainly comes into play when attempting to borrow money. A few examples would be applying for a car loan, credit card loan, personal loan, mortgage, etc. So buying a cup of coffee or subscribing to Netflix has nothing to do with your credit score. Your credit score is only useful when you are applying for credit. So, how many credit scores does an individual actually have? Well, there are 3 main credit agencies in America. We have Equifax, Experian, and TransUnion. All of them practice the same fundamentals, but each one has a slightly different formula when calculating credit scores. They usually display similar numbers. They're usually only a few points off or so. So, how are credit scores calculated? Ultimately, they are broken down into 5 major categories: number of accounts, types of accounts, amount owed, length of credit, and of course, payment history. Now, each one of these factors account for a specific percentage of the overall credit score. The next main question is, which factors are the most important when it comes to making up the overall credit score? Payment history makes up about 35% of the overall credit calculation. Payment history pretty much represents if an individual pays back their debts on time, every time. This helps a lender figure out the amount of risk it will take when extending credit to a specific individual. The next factor is amount owed, and this accounts for 30% of the overall calculation, and the meaning is pretty self-explanatory. Now, having various credit accounts and owing money on them does not necessarily mean you are a high-risk borrower with a low credit score. However, if you are using a lot of your available credit, this may indicate that you are overextending your credit, and banks interpret this as you are a higher risk of defaulting on your loan. The next section is the length of credit. It accounts for approximately 50% of the overall score. In general, a long credit history will increase your credit score. However, people who haven't used credit for a long period of time may have a high credit score, dependent on the rest of their credit report. New credit is the 4th piece of the puzzle, and it accounts for 10% of the overall score. New credit represents if an individual has been seeking new lines of credit. Research shows that opening several credit accounts in a short amount of time represents a greater risk, especially for people who don't have a long credit history. If you can avoid it, try to not open too many accounts in a short period of time. And last but not least, credit mix is the final factor when calculating credit score. Like the previous section, it makes up only 10% of the overall score. Credit mix is simple to understand. It pretty much considers your mix of credit cards, retail accounts, installment loans, financial accounts, and mortgage loans. But don't worry, it's not necessary to have one of each account. Now, the third main question we need to answer is, why is having a high credit score a good thing? Well, it allows individuals to have more access to lines of credit, lower interest rates, and of course, the best credit card offers. What are the consequences of having a bad credit score? You basically can't do anything. You can't go on a date, you can't go for a walk, you can't go for the gym. You're basically in limbo. Your life is ruined. No, I'm totally joking. Ignore what I just said. Absolute joke. Let's get back on topic. Having a low credit score typically causes one to have less access to various lines of credit. They will also have a high interest rate and be unable to acquire some loans. Ultimately, it is considered a bad thing to have a low credit score. You may not be able to borrow money to purchase your dream house you've been wishing for all these years and years. You've been saving up for a down payment, and then you can't get that dream house you wanted because of your credit score. Now, we have the basics out the way. Let's discuss the main questions I hear regarding credit scores. The first question is, how do I improve my credit? Now, acting appropriately in each specific category overall can improve your credit. So making payments on time, not closing your oldest credit cards, having various types of credit, not seeking new credit, these are all great ways to improve your credit. If you want to improve your credit fast, what should you do? Well, in that case, you want to focus on not missing future payments and of course, improving your overall credit utilization ratio. Wow, Shane, what is this credit ratio you're speaking of? This sounds like hieroglyphics. What are you talking about? Whoa, calm down. Let's take a second to really evaluate what the ratio is so we could leverage it and use it to improve our overall scores. The credit utilization ratio is basically the amount of money you owe in relation to the amount of available credit you have. For example, let's say you have a $1,000 credit limit and you currently have a balance of $100 on that credit card. Your credit utilization ratio is currently 10%. The main goal is to keep your ratio below 30%, and of course, the lower, the better. Another question I get asked all the time is checking your credit score free? The simple answer is yes. You can check your credit score for free online, and yes, for free, once per year at each of the available agencies we have in America. What is considered a good score? Generally speaking, anything above a 700 is considered a good score in America. How I build my credit is another question I get asked all the time, and the simple answer is, drumroll please, have a credit card and use it. Get a credit card as early as possible and be responsible with it and use it on a regular basis. Now, don't be one of those individuals who graduates college at age 18, maxes out their credit card, and just loads it up to the very max and never pays it off. Don't be that person, and we all have friends who are like that. Don't be that person. Responsibility is key when it comes to ensuring that you have a good credit score. Another question I get asked all the time is, who sees my credit score? And the simple answer is, anyone who you wish to borrow money from can request a copy of your credit score. A couple examples of who may run your credit score would be auto loan agencies, mortgage brokers, apartment complexes, individuals who you are requesting personal loans from, and sometimes even an employer. All these people may request a copy of your credit score. Another question I get asked a lot is, does my income affect my overall score? And the simple answer is no. Your income has nothing to do with your overall score. Although, the more money you make, and assuming your cost of living is below the amount of money you make, it could be easier to pay back all your debts with a high income, but mentally speaking, your income has nothing to do with your overall score. Another question I get asked all the time is, does checking my score affect my overall number? And the simple answer is no. If you check it, it will not affect you in any negative way. If another person checks it or an agency, then in that scenario, it will drop a couple points. But in the long run, typically, it bounces back quite fast. If I have no credit history, how do I begin my journey of building credit? Well, many banks will provide individuals a credit card with a very low credit limit to minimize their risk. If you can't get a regular credit card, you can always apply for a secured credit card. A secured credit card pretty much allows an individual to give money to a bank, and that becomes their credit limit on that particular card. The next question I get all the time is, should I close old credit cards? And the answer is no. No, you should not. You can close them, but your overall score may go down because how long you have a credit card plays a role in calculating your overall credit score. The next question I hear is, can I get a loan with bad credit? And really, it depends on how low your credit score is, but generally speaking, yes you can. But you would just have a higher interest rate, which means your overall payments will be higher, and ultimately, the overall cost to finance that good will also be higher as well. What is the best method to pay back your debts? Well, there are two main methods that people encourage. The first method is called the snowball effect, and the second method is called the interest method. The snowball effect pretty much means you start paying back your debts in order of the smallest debt to the largest debt. The idea behind the snowball effect is that you pay down your smallest debts first while working your way up to the bigger debts. During this process, you get these micro victories where you work yourself up from the smaller debts to the largest debts, where you are gradually gaining momentum and making more and more progress every time you pay off one of these debts. The second method is the interest method. And the idea here is that you're going to pay back your debt with regards to the highest interest rate first and working your way down to the smallest interest rate. The goal is to start with the highest number because it will save you the most amount of money in the long run. Remember, interest is the amount you pay to borrow money. Alright everyone, thank you so much for watching. That is all I have for you today. If you enjoyed the content or you got some value from this video, maybe subscribe. Thank you so much again, and I'll see you guys all later. Bye.